reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's go straight to the charts and see what we have. A bit summarizing the previous action. Price was hitting our support area the second time. I had running longs from the first touch, and also on the second retrace, I was longing from this area here. Then price made a move lower into the bigger area one more time. That's where I updated. Don't close the long, and let's see if the bear market ends here tomorrow or after a range gets formed. That was on this drop. We got a range, and I also wanted to add to position if the range gets a sweep. If not, I would just stay in the trade, with the idea being wrong if price breaks below the SR level and closes a daily candle down there, which was a low probability, but we needed to be ready. The first action level was this POI, so logically, I stay in the trade. Additionally, several statistics had shown that a potential bottom formation is building here. I won't go over them now, but there was weekly time showing that we were already in a bottom formation. Daily cycle time pointed to that level here, which, by the way, didn't get touched, and I didn't get my limit filled where I wanted to add. Anyway, hash stats were showing bottom formation actually already since the last low, and back then I said we are in the bottom formation and the percentage is increasing for it to be confirmed while price moves lower or goes sideways by spending time. And while support was holding and price went sideways, it was increasing the percentage by spending time here. Then I said the funding rate was decreasing while price was hitting support. So that's not bearish. Then I showed the NASDAQ divergences in the public video. That was the second to last one, and showed momentum for the weekly time frame. Now, it's not confirmed yet, of course. As we can see, we need weekly closes for this thing to move, and it needs to go above 15, but better closer to 20%, and close above to confirm the volatility in that direction. Things can go fast, so often when it's confirmed, we're already on the move itself, while last time it even made a new low. So that's, as mentioned, not a 100x strategy with 1% stop loss, but a nice puzzle piece that helps with the overall picture reading. By the way, I want to mention that just because the volatility is low, it doesn't mean it's a bottom signal. Because volatility is directionally neutral, so you have to look at the market and the overall picture. Because like you can see, for example, on a daily time frame, or even on lower ones like the hourly, volatility can be low. And when the move is down, then it extends in that direction. So don't think it blindly works like that, but it's a good sign if it confirms in one direction, of course. So what we had after that, price started to move to the side, breaking one resistance after the other and flipping them to support. I also mentioned in one of the previous videos that I don't want to short anything on the rise that will come, because more or less that's what I expect. Mainly all poor highs just get smashed through, because they're easy targets, easy levels where people might have stops, so big players use that to take a lot of profits on the rise, while people keep trying to short at the same time, fueling the move even higher. So for me, as said before, there will be no short on that rise. Another question is, of course, would I like a retrace to take another trade? Well, sure, but just because I would like to add to my trade or even open a new one, I don't short into that idea, but simply wait if it comes or not. For example, yesterday price was hovering around here, and I said, look, I want another setup, but best case would be a wick below into that lower level, because that would give some hope to the people who are shorting. For me, it would be a really nice place to trap more of them and then see a reclaim of this level with a daily close above. If it would be a close below, well then I would be the trapped one and get out of the trade. That was the idea I would like to have. I'm not shorting into it, just waiting. Because I also know price can just keep grinding up and not give any entry to people who are too late, while shorts get trapped on the grinding move. So either way, it was simply a no trade day for me. And it might be painful if someone missed the trades from lower, but hey, price spent a lot of time down there, And if someone didn't want to long there because he was bearish, that's now the consequence. You have to wait for the next setup. Simple as that. They will come sooner or later, but I can say now, mostly they will not be as easy as the trades before. Now, in the last video, we also looked at the quarterly and the fib retracement to the 50% level and said it just happened once. Yes, in all history, not many examples, but they will come with time. Until then, we work with what we have. And for now, there was only one time where it touched the level, other times it didn't. So the conclusion was, if price comes down to them, then it's a support level, but there is a chance price doesn't touch it at all. That was also the level with the monthly statistical level as confluence. And, well, price made what it made in the past. It didn't touch the 50% retracement. To be fair, if I look at the monthly candles, it looks ugly, but it is how it is. On the weekly, to be fair, it looks good as a formation. So, if you doubt, zoom out. But sometimes the middle is not bad as well. Means need to catch the focus when zooming in and out, and when you stop at the weekly, that's where it actually looks good, while other time frames don't look good candle formation-wise. Oh, before we go to the local levels, one more thing, and that's the 5-day setup. Last time we looked at it, it was here, it was activated, and I said if it runs, that's nice. If it fails, then most likely average days. And that was 2 bars. And that's exactly what happened. 2 bars, and it lost. Now we can see it close the candle again above the EMA and activates the trade. And here is now the same story. If it fails, we would expect it to happen within the next 10 days, and the loss would be around 5%, which is around 112K where our support levels are. So if we get a retrace down there, well, that's nice. Anyway, for the winning time, it's around 10 bars. That means if price starts to go over the time with the 2 bars, the chance increases for the setup to play out. And that is on average around 10 bars and an average move of 39%. And that's around 160K plus. So all eyes on this as well. While here the momentum is shifting up if BTC closes above 115K and the volatility starts picking up, which would then lead to the weekly time frame we talked about earlier. So that's basically it with that setup. Now, just need to wait again where we will stand in 10 days. If it goes lower, then it gets invalidated, and usually no big move if this setup is not active, because as you can see, all the big moves come with that setup, and on the 10-day time frame. So if the setup fails, then no big move until at least the next one triggers a trade. For now, the doors are open, just need to hold them. Now let's mark out today's averages and have a look where we stand. Now, what we can see first is the day opened and has no wick to the upside. That doesn't mean automatically it has to repair it on the same day, but it remains a level to repair, meaning price often will revisit this level. Sometimes it happens within the same day, sometimes only after bigger retraces. All we can do is trade it level to level, of course. First thing, yesterday price hit perfectly the average gain level. And as mentioned, it didn't provide me the long opportunity. Anyway, clearly I'm not longing at the average gain level. As we can see, it was the current top. Now for today, the average loss level sits basically at the previous SR level. And while yesterday it was a bit lower, today if we get a wick down there, it can be the confluence for the SR level to hold, at least for the day. This average moves with the closes. The average gain level for today would be basically near the all-time high. So for me, as before, if price just keeps rising, I don't do anything. I'm just sitting in the longs from lower. If we get a retrace, then I will look for a day trade on the SR level. If we switch to the linear chart, we can see previously this level had a lot of closes, while wicks down are fine. That was also the idea from yesterday. If price comes and wicks below, and then closes above, that's nice for higher prices. For now, I will look basically at the same. If price comes down to that level, wick inside is fine, but I want to see closes inside or above. If it starts to close below, then I would need to wait for the next level or a reclaim for the next action. The lower level would of course be the monthly open or the 5-day setup fail level near 112K. But I'm not aiming for that as long as support is holding, and I personally don't short it because the overall bias remains up. And yes, I know the lows down there look ugly. Of course, If you are looking for a short, this is here more or less the best level, either a lower high here or an SFP of the all-time high. Anyway, for me personally, I would be fine with missing this move if that happens, because as it stands now, price has a low probability to take out the previous month low, and we trade above the previous resistance levels. But at the same time, of course, the low was formed really early in the month, and purely statistically, it's not safe. Let's say it like this. With some statistics that have nothing to do with each other, the result is price has a 95% chance that it won't go below the monthly low, at least this month. And other stats show that 94% of the lows were actually formed after October 1st. So that means to make this level stronger, price would need to spend time, best case 1 or 2 weeks, while holding the low. That would increase the chance for the low being in and increase the chance with each day for higher price, or at least not a new low. So for now, one stat says the low has a higher chance to hold, and the other says it needs more time. Two different stats that both confirm the bottom to hold, at least for this month. Same as we had last month, where I said there is only a 2% chance that the September low gets taken out, so if it would happen, then it would be a low probability event. That was also one of the confluences to hold my trades for higher prices. Now, if price makes a new all-time high, then we have quarterly statistics that say we would have a very low chance to go below 105K. And that's not only about price, but also time, meaning for the next 3 months, price would statistically have a low chance to hit that price. With that said, for me personally, and statistically, I had a reason to long and to hold the trades, but also more or less not aiming below this month's low. At least this month, that means retraces are for me to look for longs, and especially if it takes out the all-time high. Now, of course, things can change, and for that, I update in the Telegram every week my top signal, if the top is in or not. So if you want to follow that, you are very welcome. You can choose the normal tier or the one with the rabbit box strategy for spot, or also join my copy trading program. It's for free. Just go to BitGet and copy me, and soon I will add Blowfin. Okay, now let's say I'm wrong. So what would you like to see for the downside? Of course, what you want to see first is price closing daily or weekly back below the SR level. At this time, it still can be the next support level for a higher low area, but if that fails on daily, or especially on weekly closes, well then, I think this low will not hold anymore. I doubt I will trade an SFP long there, but rather aim for much lower. If that happens, I will of course update you. But for now, I can't say that, because overall support was holding and price just flipped one after another. So shorting or being bearish here in this area is not the smartest thing, even if you think we are near the end of the cycle. In that case, even more. Can't be bearish at support level because the top was not in. There were no signs for the top being in. And with that said, if I don't see in my stats that the top is in, then logically I look for longs towards the top. Even if price would go down below that level, that would only mean for me that this cycle extends, and I would look for longs rather than shorts. Yes, it would mean I miss moves, but for me, it's fine because I know for myself I trade with the overall direction, and I need that. For myself, I feel more comfortable holding bigger positions when I know it. Okay, now both sides are clear. Bulls need to hold this level, and worst case make a higher low at the 112K area. Best case not even go back down there. Bears, which as it stands now have lower probability, need closes below, and best case a close below that same area. In that case, yes, much lower prices can be expected, and we will go over the targets once it happens, but not before. Okay, now let's check quickly momentum. Daily is still up as long as BTC closes above 122K, so this will remain up for the next few days. 12-hourly needs to lose 119 to 118K to cross down. That's basically our first S level here. Keep in mind, momentum is in extremes, but bullish control zone, it can stay there a while. 6-hourly and 4-hourly, also both in the extremes, need a close above 20 to cross up, and 1-hourly coming slowly down. So one thing is clear, it's not the best thing for a long when all are so much up. But if it hits a nice level, then a potential scalp or day trade can be possible. Now let's mark out the low time frame levels and see if we have something. Okay, based on the correct direction, and if we want to go level to level, that would logically be the first level to watch. The SR level at the average loss for today, together with the 1 hourly swing low. Means if they want to keep the 1 hourly intact, that's the level to hold, with some space for a wick. Now, of course, if it's not near and more volatility comes in, then this trade would be a losing one, and I would simply look for the next level where, as said, I need to see whether it will show signs of strength by reclaiming or failing and going to a lower level. That's why if there will be a trade from the lower level, I would need to take some profits on the rest of the bigger SR level to protect the capital. And that's basically it, because based on averages, I can't really expect too much downside today, only if the average doesn't hold. As I repeat it many times, and you can see it here, price rarely trades outside the average. It can happen, but it's rare, so I don't expect it to happen every day, because if I would, then I would miss a lot of good trades. And here is more or less a good level. An SR level, average loss level, 1 hourly swing low, and I saw it's also a time point of control. And I see now it's the PD value area low and PD low. And slightly lower, we have the daily point of control sitting at the low of the SR level. So for me, as always on these day trades, I don't risk much, and I would allow price to make an SFP here. Only if it closes the day bearish, I will close the trade in a loss. Until then, I manage my size and look at how much room I want to give it, like below the point of control for a possible massive wick as an example. But yeah, for now that's the level I would like. If it fails, then the level below. And from there, we go step by step as the weekend comes closer. So this is where I would look for a scalp or day trade with a slightly bigger invalidation. And take profit. One would be the local high on the left side, slightly below it, because it's the local small range. That means, of course, price could just hold the structure here and move higher, but for me, I don't have an invalidation level here. That's why I have to wait. If I get it, nice. If not, then waiting for the next one where the conditions are better, because I want quality, not quantity. Before I wrap it up, one more time mentioning the Patreons. If you have interest in seeing the updates more frequently in the morning routine updates, you can join or follow me on the copy trading program. Until then, I wish you a good day and see you in the next one.